Today's topic is finance. Our context is business. We will discuss a few easy terms. Income, money coming into the business. Expense, money going out of a business. Profit is equal to income minus expense. So if income minus expense gives me a positive value, then I am making a profit. If income minus expense gives me a negative value, then I am running at a loss. If income minus expense gives me a zero, then I am neither making a profit nor a loss. At this point, we refer to it as break even. Other terminology, fixed expense or fixed income. So when I say fixed, I mean it is staying the same. So my expense from month to month or from product to product will stay the same. Variable expense or variable income. Variable means to change. So in this case, my expense will change depending on the number of items I am producing. Occasional is once in a while, so my occasional expense will be an unexpected expense. Selling price is the price at which I sell my product, and cost price is going to be the price in producing that particular item. So two important equations. One, cost of production is equal to my fixed expense plus variable expense. My cost price is equal to cost of production divided by number of items. So now that we understand the basic terminology, we're going to apply it in the form of an example. So example 1 says, E-Electronics wants to find a selling price for their tablets. The business has the following fixed expenses: electricity, telephone, salaries, which means irrespective of the number of products I'm buying or selling, these expenses will stay the same. It's fixed. It says tablets cost 250 Rand from the supplier. So already I understand that the 250 Rand is going to be my cost price. Question 1.1 says complete the table. So we will start number of tablets. It goes from 1, 5, 15 to 20. Fixed expense, variable expense, cost of production, and cost price. So we will start with fixed expense. Fixed expense is 1,000 plus 500 plus 9,000. So altogether my fixed expense is 10,500. And it will stay the same irrespective of the number of items. So 10,500 all the way down. Variable expense. Variable expense, according to the definition, we understand that variable is going to vary or change depending on the number of items. So according to the question, the tablet costs 250 Rand. So my variable expense for one is going to be 250 Rands. For 5 of them, I'm going to say 250 multiplied by 5, that gives me 1250. For 15, I'm going to say 15 multiplied by 250, that gives me 3750. And for 20, we say 250 times 20, which is 5,000. Okay, next column is cost of production. So I'm going to remind myself, we go back to the equation. Cost of production is equal to fixed expense plus variable expense. So I'm going to take column 1, fixed expense, add it to 250, that gives me 10,750 Rands. Let's try for 5 of the items. We've got 10,500 plus 1,250. That gives me 11,750. 15 items. 10,500 plus 3,750 gives me 14250. So that's 14,250 rands. Lastly, 20 tablets, fixed expenses 10,500, my variable expenses 5,000. So my cost of production is equal to my fixed expense plus my variable expense, which is going to give me 15,500. Let's go to the last column. So all the way across. One tablet, my cost price. So I'm going to go back to my notes. Cost price is equal to cost of production divided by number of items. So I'm going to say cost of production, which is 10,750 divided by number of items, which in this case is 1. That gives me 10,750, stays the same. Then we've got 15 tablets. I want to work out my cost price. So I'm going to say cost price is equal to cost of production divided by number of items, and that gives me 950. So a simple technique when it comes to filling in or completing a table, we study the values that are already there. So what you do is you try and find a method to calculate existing values. Once your answer corresponds with the answer that is given, you know that your method is correct and you have enough confidence to now complete the table. Second question, 1.2, it says, the owner wants to make a 30% profit on sales. If he sells 20, what is the selling price for each tablet? So I'm going to say selling price is equal to cost price plus cost price times 30 over 100, 30%. We're now going to substitute, so it says for 20. So I go to 20, I go across, cost price 775. Again, I substitute for cost price 775. I multiply it by 30%. So I'm going to get 775 plus 30% of that value gives me 232,50. When I add this up, I'm going to get 1,007,50.